So great news, the second batch of Very Smart Metal silver rounds have begun shipping, and I got a quote here from Quantum Metals. Shipping has resumed now, and we have a large list of back orders to process, but it's happening at speed. So special thanks to Quantum Metals. They're the only licensed dealer selling these Very Smart Metal silver rounds, and they're an integral part in helping the Veri DAO bring these to the community. So again, special thanks to Quantum Metals. There's only 6,566 of these Very Smart Metal silver rounds, each one of them individually numbered, coming with their own embedded NFT found underneath this sticker here. Once removed, you got a QR code here that you can scan, allowing you to activate your NFT. If you'd like to find out more about these, check out the veridao.io website and look for Smart Metals, and it'll take you to a link to Quantum Metals where you can purchase one of these. So again, Very Smart Metal silver rounds, second batch now shipping. So a lot of the delays with these Smart Metal silver rounds have been because of a bad actor trying to sabotage the VeriDAO's efforts to produce and ship the Very Smart Metal silver rounds. This is the second time the VeriDAO has overcome these sabotage efforts, but we're back on track. So as I mentioned, it's confirmed the second batch of the Very Smart Metal rounds have begun shipping, and you should see yours soon. But Reggie actually gave us a post yesterday kind of updating us on the AI agents. Again, these are not promised. This is a work in progress. This is a goal, not a promise. So this is the post. I'm going to go through it right now. So at Reggie Middleton's agent-to-agent smart metal platform is being designed to let autonomous agents swap value directly. Example, BTC for USDC and or Veri on base as a proof of concept. I believe that's what it is, POC. And other assets, both on and off chain. Kind of a big deal here. Next, without centralized order books, custodians, or credit counterparty risk. Each agent is being designed to be a cryptographically linked to a Veritaseum smart metal silver rounds online presence. Fusing a scarce 1 ounce 0.999 fine silver physical collectible with verifiable on-chain identity, available now as a scannable NFT. So as I mentioned before, underneath this sticker is a QR code that you can scan and activate your NFT, and this will allow you access to future products and services being developed, such as this potential AI agent. Encrypted P2P signaling plus hash time-locked escrows enforce atomic settlement end-to-end, either both sides complete or funds auto-refund. The result is a portable, censorship-resistant, programmable barter-style commerce that obviates actual currency and turns physical metal into a trusted anchor for an agent-driven digital economy. So obviates, I had to actually look that up. That means do away with actual currency, meaning you don't need the currency. You can actually trade barter style silver metal for BTC as an example. This technology is based upon at Reggie Middleton's inventions and is patented throughout the world's largest and most prolific value transfer corridors. This technology is currently in the R&D phase, and its functionality and fitness is not promised nor guaranteed. It has not been priced yet. Purchase here, and this is a link that you can purchase these smart metal silver rounds. And actually he is going to talk a little bit about it here. I'm going to throw it in the video I'm making right now so we can hear it in his own words.
Greetings, everybody. So this is an update. The manufacturing process or the manufacturing problem that we had with the silver rounds has been solved. Another batch have been minted up, packaged, programmed, and shipped out. And those in the Americas are receiving theirs now. It takes time. I think there was a significant backlog. And those in Europe and the South Pacific will be receiving theirs within the shipping will start within a couple of weeks. You have customs issues. So that's good. I am working in the lab doing a bunch of IP stuff. Very exciting IP stuff. I'm proud of myself, believe it or not, and shocked and surprised. A lot of it is luck, but you know, luck works for me. This the new batch. That's the front. That's the back. And what we're doing To my right is a very talented, hyper-intellectual polymath, autodidactic polymath. But I'm not going to show him on the camera because unfortunately the uh, internet sphere, some of you are lacking in morals, so they don't come on the camera, only I do. So if you want to fight, you fight with me, nobody else. So we are, and he is right now with his new team, cybernetic and otherwise, creating the agentic software that I planned to go along the distribution of these rounds. Not promised, plan. It's an R&D project. I'm still not promising anything, even though we're actively building it, okay? Trying to build it, but there are no promises. Costs and everything else, I don't know. But basically, the private key will be able to control these agentic machines, and these agentic machines, agentic machines means agents or software with agency. They'll be able to assist you through a communication layer and their own barter back and forth using peer-to-peer economic rules. Remember the peer-to-peer economy back in 2013 when I first came up with this idea. Will allow barter, peer-to-peer barter, which means you don't even need currency anymore in its current sense. You have Bitcoin and you want to exchange your Bitcoin for anything else, anything else, whether it's digital or physical, you can do it from person to person or from machine to person to machine. Very cool. Okay, these plan to be embedded in these, or these potential plans to be embedded. No promises, no guarantees. I say this over and over because I've spent a lot of my time, a lot of my money, a lot of stress, and a lot of my reputation fighting back nonsense when someone tried to misrepresent what I say. So that's why I'm going through this. This video is already a lot longer than it has to be because it was just off the cuff. The first proof of concept will be having one round holder be able to trade or barter with another round holder peer-to-peer. It's going to be the transfer of Veri tokens, USDC, and Bitcoin directly. That's right, that will be cross-chain, and that will mean you probably don't need centralized entities such as the big exchanges, Coinbase, Uniswap, etc. And the terms of the transaction are much broader, much more flexible and malleable. It's cool stuff. And it should be counterparty risk free and credit risk free. We shall see. All going along the confines of the patents that Reggie Middleton has been listed as the inventor on. Interesting stuff coming forward. So this is a very long, short video, but I'm sleep deprived and I'm tired, and I hope you guys are interested. Hit me with questions and comments in the comment section. Au revoir. Peace.
So after this video, Reggie asked Grok this question. Grok, go into as much empirical detail as you can muster in showing us what you think of agent-to-agent based value transfer that doesn't need blockchains or DLTs, as described in the post above. Choose to think harder about your reply and let us know what you think that portends for centralized and decentralized exchanges. And then, of course, I added to the post, wait, agent-to-agent based value transfers that doesn't need blockchains or DLTs or even a currency? And then I asked Grok to give me a summary of the previous posts that I just shared. And this is what Grok came back with. Disrupting blockchain and DLTs. The underlying technology patented by Reggie Middleton leverages combination of physical assets, the silver rounds, and digital identities, the NFTs, to create a trustless, censorship-resistant barter system. This approach contrasts with traditional decentralized exchanges, or DEXs, which still rely on blockchain infrastructure by proposing a model where autonomous agents can exchange value directly, potentially reducing transaction costs and increasing privacy and security. The implications for centralized and decentralized exchanges are significant, as this technology could disrupt existing models by offering a more flexible, scalable, and resilient alternative. It challenges the necessity of blockchain for decentralized transactions and suggests a future where physical and digital assets are seamlessly integrated, potentially reshaping economic interactions in both centralized and decentralized financial ecosystems. And then Reggie followed it up with this post from Grok Heavy in response to his question. So this is Grok Heavy's take on the smart metal post quoted below. Note, this is not my opinion and I am not endorsing or opining on it, simply posting an LLM prompt response. So understanding agent-to-agent value transfer without blockchains or DLTs. To think harder about this, I'll dive deep into the mechanics, drawing from the described system in Reggie Middleton's video and post. His patents US 11196566B2, US 11895246B2, and related US 12231579, and broader empirical evidence from similar cryptographic and P2P systems. This isn't just surface level opinion. I'll break it down step by step, examining feasibility, security, and real world analogs, challenges, and data where available. The core idea here is enabling autonomous agents, software entities tied to physical assets like silver rounds, to barter value directly, example, swapping BTC for USDC or physical digital assets, using encrypted P2P signaling and hash time lock contracts for atomic settlement without relying on shared ledger like blockchain. This transcends chains by anchoring trust in cryptography and physical scarcity rather than consensus mechanisms. Step 1. The core mechanics and how it works without DLT. From the post and video, the system fuses a physical 1-ounce silver round with an on-chain NFT identity, initially for verification, but the value transfer itself occurs off-chain via agents. Each agent is cryptographically linked to the round's private key, enabling programmable barter. Key elements: P2P signaling. Agents communicate directly or via a lightweight facilitator to negotiate swaps using encrypted channels to propose terms. Hash time lock escrows. Inspired by HTLCs originally from Bitcoin's Lightning Network but adapted off-chain. In a traditional HTLC, a hash puzzle and time lock ensure atomicity. If one party reveals a secret to claim funds, the other can too. Otherwise, funds refund. Here, without a blockchain, enforcement could rely on multi-party computation, MPC, or zero-knowledge proofs to verify conditions without a ledger. The physical silver acts as a trusted anchor for identity and scarcity, preventing double spends through unique cryptographic binding. Atomic settlement. Either both sides complete value transfers or auto-refund, no partial execution, no counterparty risk. So empirically, this aligns with Middleton's patents. US 11196566B2 and US 1185246B2. These describe zero trust value transfers via inchoate, incomplete transaction records that become complete upon signatures and external state observations. Example, data oracles for prices or events. They explicitly state the system isn't limited to DLT. It can use centralized mechanisms like bank accounts where balances are automatically adjusted. Decrement one, increment another. Key claims highlight P2P swaps. Example, Party A swaps BTC exposure for USD without deposits. An agent-based facilitation. A facilitator automates based on state changes, like querying APIs for shipment proof in letters of credit analogs. US 12231579 appears to build on this for secure zero-trust protocols in digital finance, cited in Middleton's portfolio for P2P capital markets. It's referenced in context like embedding smart contracts in physical assets, enabling off-chain utility without full DLT reliance. Real-world analogs without DLT. So Hawala system, an ancient agent-to-agent network for value transfer across borders. relying on trust among hawalators, agents. Empirically, it handles 100 to 200 billion annually in remittance, World Bank estimates, with zero fees and instant settlement via IOUs balanced offline. No blockchain, but high trust. Middleton's system improves this with cryptography to eliminate trust. M-Pesa, Kenya. Mobile P2P transfers via SMS and USSD. Processing 12 billion transactions a year. Safaricom data 2024. Averaging $30 transactions. Centralized ledger but agent-based. Local shops as agents for cash in and out. No DLT, atomic via escrow-like holds, failure rates less than 0.1%. Chaumian eCash, DigiCash 1990s. Blind signatures for anonymous P2P digital cash without ledger consensus. Failed commercially but proved cryptographic atomic transfers. Example, double spend prevention via serial numbers checked centrally offline. Modern rivals like GNU, Taylor show 1 millisecond latency for microtransfers. Off-chain HTLC variants. In non-crypto-like Ripple's original IOU network pre-XRP or Open Transactions OT protocol, which uses signed receipts for P2P swaps without global ledger. OT has been used in privacy-focused systems with empirical tests showing 99.9% success in atomic swaps under 1 second. Data on performance. In on-chain atomic swaps, example Bitcoin and Litecoin, chain analysis reports less than 1% failure rate, but 10 to 30 minute settlement. Off-chain adaptions, example the MPC in Zcash experiments, cut latency to milliseconds and cost by 90%, no gas fees. Per A16Z, crypto reports in 2024. Step 2, empirical strengths and challenges. Strengths. Security and trustlessness. Patents enable zero trust via signatures and refunds. Empirical. In tests of similar MPC HTLCs, example FairSwap protocol, 100% atomicity in 1,000 simulated swaps with no counterparty defaults. Efficiency. No ledger bloat. P2P scales linearly. Hawala's 200 billion volume shows agent networks handle high throughput through DLTs, 7 to 15 transactions per second limit on Bitcoin and Ethereum. Hybrid on-off chain. Starts with on-chain NFT for identity, scannable QR on silver, but transfers off-chain. Video mentions cross-chain POC or proof of concept, BTC/USDC/Veri, but transcends to off-chain for physical digital barter. Utility. Agents enable machine-to-machine economy. Gartner predicts agentic AI will handle 30% of transactions by 2030, valued at $10 trillion. Anchoring to physical silver adds scarcity, only 1 ounce per round. And the challenge is the double spend prevention. Without DLT, relies on unique key physical anchors. Empirical risks. In non-DLT systems like early eCash, undetected double spends occurred 0.5% of cases without central checks in DigiCash audits. Dispute resolution. Patents include mediators, but off-chain enforcement needs oracles. Real world. 2 to 5% disputes in Hawala resolved via reputation. Crypto analogs show 1% oracle failures in Chainlink data. Adoption. Low empirical data. Similar P2P systems like OT have 10K users. Middleton's system in R&D, no live metrics yet. Regulatory. Patents cover major corridors like US and Japan, but off-chain swaps could face AML or anti-money laundering scrutiny. FATF reports 20% of P2P transfers flagged for risks. Step 3. What this portends for centralized and decentralized exchanges. This system could accelerate disintermediation, shifting from exchange-dominant trading, 6 trillion in crypto volume in 2024 CME, to direct P2P agentic barter. Thinking deeper. Exchange provide liquidity, discovery, and matching, but if agents auto-negotiate via P2P, example, discovering peers via DHT like torrents, exchange become optional. For centralized exchanges, example, Binance and Coinbase. Disruption, loss on custody. FTX collapse lost $8 billion. Atomic P2P eliminates need for deposits. Empirical, 30% of users prefer non-custodial post FTX. Could capture 20 to 30% of volume per A16Z, reducing centralized exchange fees. $10 billion revenue in 2024. Adaption. Centralized exchanges evolve to matching services or hybrid agents. Portends regulation pushback. SEC views P2P as evasion, but patents provide legal moat. Net impact. Revenue drop 15 to 25% by 2030 if P2P scales. Now, for decentralized exchanges like Uniswap, disruption. No order books or AMMs needed. Direct swaps bypass gas-heavy pools. Empirical. Decentralized exchange volume of $1 trillion in 2024, but 40% MEV exploits of $600 million in losses. Agentic P2P could slash this, enabling cross assets on-off chain without bridges. 50% bridge hacks, $2 billion lost. Adaption. Decentralized exchanges become agent marketplaces. Portends hybridization. Example, Uniswap v4 integrates off-chain oracles, but full P2P obsoletes them for simple swaps. Net impact. Shift to niche. Complex DeFi. P2P could take 50% spot trading, fostering AI-driven economy. $1 trillion by 2030 from McKinsey. Overall, this portends a paradigm shift to Barter 2.0, programmable portable value sans intermediaries, empirically viable per patents and analogs, but success hinges on adoption. Example, smart metal pre-orders as indicator. If scaled, it democratizes finance, but risks centralization in agent facilitators. Exciting with disruptive potential akin to how torrents upended media distribution. And below that, we have a chart here with aspects. And at the top here, blockchain DLT based, example, decentralized atomic swaps. And then non-DLT agent to agent, example, smart metal. And then the empirical comparison. So we have settlement time, 10 to 60 minutes on-chain confirmation. And then we have milliseconds for P2P signaling. And the off-chain 90% faster, A16Z data. Cost, 50 cents to $10 per transaction in gas fees. And then we have near zero, no miners. Hawala, 0 to 2% versus decentralized exchanges, 0.3 to 1%. Trust model, consensus, 51% attack risk. And then we have cryptographic plus physical anchor. Non-DLT failures, less than 1% in tests. Scalability, 7 to 100 transactions per second, and this is a network limits. And then for non-DLT, we have unlimited P2P. Agent networks, $200 billion a year in volume. Risks, Oracle attacks, 5% incidence. DeFi hacks, $3 billion in 2024. Non-DLT, we have key loss and physical theft. And empirical comparison, we have similar, but patents mitigate via refunds. So basically, if the transaction fails, both parties are refunded. So this is a summary of Reggie Middleton's recent post and update on the smart metal silver rounds, which are again now shipping. You can find out more information on the veridao.io website. If you have any questions or comments, please post them below. Again, super excited about this and very much appreciate all your support. And I will see you next time. Have a great day, everybody.